Hello, I'm Michael Pascoe. It's Monday, March 11, the start of Confidence Week. Readings of the pulse for business, consumers, job seekers, home buyers and a Reserve Bank Assistant Governor. There's also Wall Street's record to keep in perspective and the Chinese economy's performance as the headline bears growl at every shadow. But let's start with the market confidence that seems to flow from the Dow Jones Index reaching new highs. Well, for a start, the Dow is a silly and rather useless index. It's only 30 stocks, it's not particularly representative of the broad American market, and it has been prey to manipulation from time to time. But it also just happens to be the world's best-known barometer of stock market confidence, so perception triumphs over reality yet again. For the sake of discussion, it doesn't matter for now, as the better S&P 500 index isn't far off a record either. Whether that makes sense or not depends on whether you're basically bullish or bearish. But what we've been hearing regularly from the world's biggest whingers, us, is a complaint about why the Australian market isn't setting records too, given our superior economy. There are a number of reasons for that, but adjust the All Ords for our dollar and franked dividends and it already looks much better. Then consider our market's investment performance over time and you realise there's more to markets than index highs. Despite being about 25% below our peak, the Australian market has still beaten the US market and just about everything else over history. On a shorter time scale, the total return of the S&P since the peak of the dot-com bubble in 2000 has only been 26%. Our All Ords is up about 40%, and that's before our fat franked dividends. So stop whinging and enjoy. And then there are the China bears, trying to read the worst into the weekend's stats out of Beijing. There are headlines around about Chinese inflation rising too much. I remember one a couple of months ago warning that it was too low. A little perspective. There's an agency story on the Fairfax site noting that Chinese industrial production in January and February combined is up by 9.9% on the same period last year. In the same period last year, industrial production was up by 11.4%. So the bears again want you to think China is falling over. But turn those percentages into widgets and it's a slightly different story. If China made 100 million widgets in January and February 2 years ago, it made 111.4 million widgets last year and 122.43 million widgets this year. An extra 11.03 million widgets were made this year, nearly the same number of extra widgets made the year before. That's what happens when the economy keeps getting bigger. Growth can still be big, but the percentages have to come back a bit. The retail sales story was something similar. Still very strong growth, and fixed asset investment even increased a bit in percentage terms. It all sounds pretty much all right to me. Domestically, the NAB's monthly confidence survey is out tomorrow, the Westpac Melbourne Institute Consumer Confidence Survey on Wednesday, as is the January Housing Finance, and the February labour market figures hit on Thursday. Business and consumer confidence were picking up last month, along with housing prices and stock markets, and despite the soft labour market. On Thursday, the RBA Economics Assistant Governor, Christopher Kent, is giving a speech to the Australian Institute of Builders. Now, that's a couple of mobs that need confidence. The RBA and the builders. That building is about to do what low interest rates are meant to help it do. Get moving. Talk to you on Friday week.